The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, Thursday, April the 25th. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock Eastern Time till noon. And I follow Steve Rhodes, and Steve, as always, did a great job. 2 hours. It's a lot of work. 2 hours. Great. 2 hours. And most importantly, this being Thursday, I am followed by Larry Pesavento. This should be a really interesting day because Larry has been looking at all these different gartleys and butterflies, and I was discussing gold. This is going to be, I am really fascinated to see what he's going to say because some of the patterns that have been forming are really interesting. We've got a number of V-shaped patterns, and I'm going to see over the period of the day how the materials, the gold, silver, in other words, is risk on back again. And is that a peak F in the bonds that I'm looking at? So far, all the characteristics say that if there is a close, bonds at 147.22 30 seconds, down a half a point. If the Treasury bond June contract closes decisively in the next 2 days under, I would say 147.5, but no, I'm going to say 147 to give it a little room. Closes on 147. I have to consider that that's going to be a help to the market, number one. Number two, and this is something that was really fascinating to me. I almost went long the TBT for one of the very first times in a long, long time. But I'm not yet sure that I've got all the characteristics that I need in the TBT to even put a trade on other than a very short-term pop, because it's got that H that goes to an M pattern that says it should, in fact, go back under 56.32 at some point, and the TBT, which is 200% short, the ultra-short Lehman 20-year Treasury bond fund, is at 60.53, up 55 cents. So I kind of held off. It's going to be very interesting. I was talking about gold the other day, spoke about gold going to the M contract. That gold had, in fact, done something that was very unusual. It wasn't a gold, it was a GLD. There's a technique that I use that says that I do not use volume per se as many people do. Everybody has their own techniques. I just have found in my own work, it just doesn't mean, it's absolutely a tertiary indicator. It's not even that it's just an indicator that's out there. But there are moments when I absolutely use it, but I always use on-balance volume. That is just a set of cumulative price movements where if whatever it is you're looking at is up by a penny at the close, you add volume. If it's down, you subtract volume, and it's cumulative. So, but I don't even use it that way. I use it as a price point measure of a chart formation. That's all I use it as, the closing price chart formation. That's not even what I'm talking about. What I'm talking about is what I call, I typed it in here. I had a whole thing I showed subscribers the other day. It's called the climactic volume spike. That is where the price totally capitulates to the downside. And that's the bar that you get the maximum volume that you've seen in a very long time. And that says, while it doesn't give you the upside, other than an initial, almost like torque in the stochastic, going to the momentum of the MACD. That's how I used those two indicators. So this is torque. And then there's very little momentum per se. And what happens, it just creates a big arch formation that can last a long time. I'm talking 20, 28 to 34, even longer bars. Now, this works all the way through to weekly charts, but monthly charts are something else. And weekly charts, there have to be certain characteristics. So in this case, I'm only using on the daily, and the daily's already had 1, 2, 3, 4, 5, 6, 7, 8. So there could be a number of bars going to the upside. Doesn't say that the GLD can go back to wherever it was on the upside. What it does say is it should try to fill the gap and the low there was 143.43, and right now it's at 140.74, having come off the 130.51 low bar, and that low, this is a big percentage move, a very big percentage move. Of course, that's nothing to what's happened when it was at 174 at peak B minus, a failure back in October of 2012 down to 130. So just wanted to get that out the way. Now let's just go through the numbers, because I had planned something today. I usually do this on the Friday, a technical Friday, but I needed to do it. Just like I spent time the other day, I can't even remember if it was yesterday or the day before, spent a lot of time saying if the SMHs break 1 penny, about 36.18, that'll take it to leg C in the monthly chart, very positive, and that would be also a leg E in the weekly chart, a positive, but it's starting to get a little bit stretched. And the daily would be breaking out into leg B. Why? Because I was looking at Intel, if you remember. I was asked about Intel. Must have been yesterday. And I said if Intel breaks 1 penny above 23.06, which it actually did, can't remember if it was doing the show or whatever it is. Anyway, this is leg C up for Intel, leg C in the weekly, and only leg B in the monthly. But the monthly chart needs a lot of work to be able to sustain the move. Now let's go to the numbers. The Dow's up 75 at 14,750. 14,750. Unbelievable. S&P's up 10 at 1589. Comp Index is up 27 at 32.97. Gold's up 31 now at 14.55. Silver's up 1 at 23.90. High-grade copper is up 9 at 3.24. Now this is really good action. Platinum's up 23 at 14.54. Crude oil's only up 13 cents. Man, I tell you, this is a market that has a number of things going for it. Bonds are only down 13.30 seconds. I think that might increase, but we'll watch it closely. And the dollar is down 11 cents. Euro is up a little bit. Now let me just do this quickly. Should I go through the plan that I had? You know what? I was so methodical the other day. I did manage to get to all the things that I wanted. I'm going to do that now. So here we go. I want to look at these stocks in particular. Hershey, HSY. Hershey is trading right now at 89.70, up 39 cents. It's made a peak D in the daily. There is a chance that this is not a brand new leg B in the weekly, but a leg F. I won't know for a little while. Everything about it tells me that it's acted extremely well, and that, yes, it's a peak F at 89.70. If it breaks 86.28 decisively on a weekly close, that says be careful. Hershey's coming back. It's leg F in the monthly. And these are all potential recycles. So I can't believe it. I'm just going with the most conservative count. On balance volume in the monthly says watch out. On balance volume in the weekly says watch out. There's a divergence between the relative strength. The stochastic's pulling back, but still at a strong 92%. MACD is still expanding, but the histogram says it's slowly the parameters between the fast-moving average and the slow are coming down. So that's Hershey. Let's go to the next one. They're out of order from what I had. I just put them down as I remembered the symbols. Clorox. And now these have been all defensive stocks. Clorox is making a peak E, having hit 90.10. Let me type that in. 90.10 in the daily. Potential peak E if this weekly isn't a new high above 90.10 in the weekly, and leg D in the monthly. So this is Clorox, another defensive stock. Look at these overbought indicators right here. Folks, if you want to learn about these indicators, I discuss them in great deal in my webinar called Moving Averages. And, of course, in my CD, Introducing the ChapmanWave Methodology, I talk about the patterns. And there are 27 chapters. I go through a lot of these things in great, great detail. So let's go to the next one. Eli Lilly. You can see I'm all over the show here. Why? These are the stocks that have been the most spectacular to the upside. Eli Lilly, peak F. I'm going to just run these. I know that I'm moving quickly. If you review this archive, you'll be able to do it. I need to get these done for my own sake. I'm using this time. 58.40 was the high in Eli Lilly. Pharmaceutical, fantastic move to the upside. I've got it as leg C in the monthly. I've got it as leg peak E potential. No, it's already made a peak E in the weekly. The MACD is turning down, stochastic's turning down, but they are still basically strong until tomorrow at 4 o'clock. We'll check them out. My suspicion is that Eli Lilly is going to have a digestive phase here, and from 56 could pull back to 52. BMY, I haven't even looked at this. I just wrote the name down. BMI, that's Bristol Myers. Bristol Myers made a peak. Oh, I love this. This is a gap. This is beautiful. This is a peak E. Right arm extension. I always raise my arm. A right arm extension with failures in the technicals in the daily. Man, I just know why wasn't I shorting these things this morning? Leg E, because I needed confirmation. Leg E in the weekly chart, potential peak E, by the way it's acting right now. Still, the technicals are fantastic. That doesn't mean to say it couldn't pull back sharply. And a potential leg E in the monthly chart. And there the technicals are, excuse me, good. Probably not as good as some of the others. Amgen, I haven't even looked at Amgen. I just wrote the name down because I knew it was going to all-time highs. Yep, gaps down from a peak D top in the daily at 114.95. Type it in, 114.95. 114.95. Leg D in the weekly, and leg F, potential leg F in the monthly. I have to tell you something. This rotation is going to be extraordinary because we have a couple of stocks, a few stocks in my opening call. We have no shorts. I was not prepared to have my thinking messed up when I was looking at upside activity. Even though there are some beauties for the short side, I just did not want to take my eye off the ball because I thought it might be a distraction. Could be wrong, but that's just the way I'm looking at it. Now, what's really important about this, there are some select stocks that are doing extremely well here. The ones that have had the spectacular moves are the ones that are going to probably be pulling back. I'm going to call it a digestive phase, even though there's a potential. I can't believe that these fantastic winners are going to be in hat-trick tops with peak F and peak E's in the monthly. So I'm just going to step back and say I'm going one time frame, the daily, to the weekly. Weekly's on Friday, and next Friday will give me the confirmations in these superb stocks on the upside. Look at Merck, MRK. I think Merck monthly is still in leg C, as I've got the count. Leg E. The weekly has made a beautiful, what I call the drop bucket formation. What the heck is a drop bucket formation? Well, in my CD introducing the ChapmanWave methodology, only available at TFNN, I have chapter 22. I have a particular pattern that's a double top pattern. And that double top pattern says, be careful, because if that double top pattern fails, and if you go halfway into the cup formation at the top, that's an inverted H pattern, there's a good chance you're going to test the bottom. If you break the bottom, you go even deeper. And these are the examples, and we're going to be watching this closely. Because if Merck drops under 45, it could go down to 43 or deeper. I'll be right back. Basil Chapman, 877-927-6648.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, and just a real quick thing. We've got a bunch of calls. I've got a bunch of emails. Let me just quickly get something to a couple of emails. AMAT, I was asked about. AMAT is Applied Materials. And they're in leg D now in the monthly chart. Of course, semiconductors, leg E. This is coinciding with some of the others. Leg E in the weekly chart, but it's a breakout here in the daily, which is brand new leg A. If this is, I can't believe this because there's no other way I can count it. If this really is leg A, you can't get a peak D until the very earliest would be. So this is A. So tomorrow would be peak A. Then leg B, peak B Tuesday. Leg C, peak C Thursday. You can't get leg D until a week from tomorrow at the very earliest if it just goes up and down and up and down. So this is really very positive. So AMAT, if you're long, stay long. It's just broken out. I think the support is at 1406 AMAT, and 1347 is the 9-period moving average. A quick one was IWM. I'm going to do the IWM, then I'll get to the others because I'm just doing them in the order that they requested from the emails. IWM is in a brand new leg A, but until it breaks above, it's at 93.77 up 98 cents. 94.58 will confirm for me that this is actually, I can't believe this, that I'm saying this. This could be a brand new buy mode, same as the semiconductors. And if it breaks out, I've still got a leg D to come in the weekly chart of the IWM, the Russell 2000 ETF, at 94.96. However, in the RUT index, the actual index itself, it's already made a D. So this is just a potential counter-trend rally going towards the top part of the channel. This is that inside wedge of my CD introducing. I don't know if I have time. I talk about those parallel lines. I call them about the inside track, and that inside track is really very important because what it does is it gives you within the channels. It gives you, I don't know if this is the one that I can find right now. It gives you, there, you see those channels? That's what I call the inside track. The sell zone, the buy zone works on the way up, the way down. So that's going to be very important. So I'm going to do this. I've got a bunch of emails still to go. I'd like to go through the question on the RUT index, but I'm just saying right now it's leg C, but peak C if the RUT goes above 954. That's the index itself. And the daily is, I'm calling it a gray A because it hasn't broken to a new recovery high. If it goes over 954.01, it started brand new buy mode in the daily. I'm going to go to Arnie in Dearborn, Michigan. Hi, Arnie. How are you?
Hi, Basil. I'll get to you kind of quickly here because it sounds like you're a little bit backed up.
No. I want you to get to your call. Okay, yes.
Great. The reason I'm calling is for a lot of people, maybe other listeners. Well, I have a couple of children that are at work and they have mutual funds and they work hourly during the day and can't get to the phone. And I think that sometimes we look at things under a microscope because I have an opportunity to watch the computer. But my question, I guess, maybe it's too general for you, but normally they have maybe so many times where they can enter and exit their mutual fund, and normally you don't want to get into too much with this. For a 5% move, it's not worth it. And then, you might miss the high, miss the low, and all this baloney.
Right.
But just a general question to you would be, between now and the end of the year, it's hard to be specific. It's like a TV program. What's going to be the high and low for the year? Who the hell knows? But bottom line is, could you give me your guesstimate? As to see, I'm of the opinion sell in May and go away till people come back from their vacations in September and buy your shares back. Do you think that we could have that type of year? And if not, what type of year are you basically looking for, if you can answer that question?
Okay. That's a fantastic question. And if I was to be able to answer it and say, Ernie, this is what is going to happen, obviously I wouldn't be sitting right now.
Obviously.
I would have got that buy signal, which I had on March the 6th of 2009. And I would have said to my wife, stop working. We are long, and we are going off on a 5-year world cruise and whatever it is. So, all I can do is go step by step. And here's my answer to you. My monthly charts, I have to, the ChapmanWave methodology so far, and I have to emphasize so far, has been so specific that I just have to continually believe in it, because if I don't, I'm going to destroy all the work that I've done. And unless it changes its pattern, I don't want to change the pattern. In other words, I do not want to get what many people have got in their minds for a long time, that there's certain things that are going to happen no matter what happens, and then they push their thinking. It's like when I'm playing tennis, and it happened to me yesterday. The ball's coming to me, and I was determined that I was going to backhand it right to the corner. Well, it was the wrong shot. I had the wrong thing in my mind. So let me explain it in that context, and we'll be back with Arnie in Dearborn, Michigan. Question is, sell in May and go away, and my answer will be very specific when I get back. Dow's up 71, S&P's up 10. Basil Chapman, Tiger Technicians Hour.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everybody. Basil Chapman here, Tiger Technicians Hour, and I have a question. It's a great question that's just come to me from Artie in Dearborn, Michigan, about a question regarding the frequently discussed sell in May and go away. At this particular point, all I can say is that I'm in leg C up in the Dow, and that's very important to me because it's closed 1 month above the previous high of October of 2007 at 14,198. We have closed 1 month, and there's a possibility that in April, if everything keeps working the way I think it is, even if we do have a pullback, we've still got to, at least I think we've got to break the 14,800 and what was the last high of the Dow? 14,887 area. That could take an entire week. So if it pulls back, I want to see it close about 14,198, and I suspect that we will see that in April. However, this is what I'd be doing. I don't think that you should get out of the market completely, regardless of any pullback. Why? Because this is only if I'm correct. If I'm correct and we're going to go to leg D, what difference does it make if the market pulls back 12%, 18%, if it goes to new highs, unless you're perfect, you are timing things perfectly. So first of all, my answer straight out is don't do anything. If you want, you can tell them to lighten up. But what are they going to lighten up? I would rather say to them, if you're able in the next month or two to actually get a little more money to be able to put into the market for the next move up, which could be a really powerful move to the upside. I don't know yet because there are a lot of other things. Maybe that's the way to do it. That's number one. Number two is if the market drops to the 14,300 area, then what we've got is a channel line in the monthly chart that says the buy zone, this is that narrow little, that track that I talk about, comes in between, it's a rising price channel. So next month it'll be at 13,315 and with to 12,970. Let's call it 12,900. So now let's just say it's a 17 to 19% decline. What happens if in the interim they're thinking about getting in, but they don't actually get to do it until the market is now back at, say, 14,100? Well, as far as I'm concerned, that makes it a very, very difficult situation, because where are they going to put the money? What are they going to do? Sectors are very important. And if I'm correct that the defensive sector, not defense, but defensive sector, like the pharmaceuticals, like the biotechs, maybe even the biotechs, or the whole food area, I didn't even get to all the other ones that I've got down here. If they are starting to make at least a topping action to say that they limited upside, but downside is going to be maybe a pretty decent pullback, other areas need to fill in that void. So are they going to choose the right areas? So I'm going to just make the suggestion that if they are nervous, if anybody's nervous about that, take something off. If you've got whatever it is in, say, a fidelity fund or whatever it is, if you want, you can take 15% off and 20% off, which you're going to dedicate, and you can name a price on the Dow, 13,800 or 13,600,
sure,
and you're going to put it back. You know what I'm saying?
Yeah, Basil, let me just kind of wrap this up. I don't want to keep you too long. Basically, you see, personally, I'm looking for a further spike into May, maybe even a month from now, approximately, as opposed to the late April or middle of May, towards that area.
Right.
And if we got to an excess, that might be a point where I would want to get out to buy back on some kind of a dip. And of course, what I could do is maybe call you back in about a month if that takes place, so we can resume our conversation.
I think I agree with that. I agree with it. I have to tell you, I'm a little concerned that my four Dow horsemen, one at a time, GE, IBM, now today it's Triple M. Let me just double check what Triple M's doing, and UTX the other day got severely smacked.
That's right. All you got to do is just tighten up the saddle a little bit.
So that's the thing that I would do, that prepare to take something off, because if the market goes up, it's fine. If it goes up, it'll more than make up for the little bit that you take off. The other is that you want to be prepared to have some money to put back. Now, what happens if imagine for a moment the Dow goes to 50,375, right?
Okay.
So you've got that extra spike into May, and you take something off, but it only drops, instead of the go away, it only drops to where we are now, 14,700 or 14,300. Even that could be a help. But for those people looking at longer term, if I was not in leg C in the monthly chart, but leg D, I would have to say to you, I absolutely concur. Now's the time to be taking something off. Okay. My only issue right now is that I'm not sure that when the sell-off is going to occur. I've got a suspicion based on the ChapmanWave flat-based restart, a technique that I use in my daily chart.
What does that tell you?
I'll be talking about it over the coming weeks, so I think
great.
Right now it's fine. Let's speak again quite soon, and we can reassess.
Thank you for taking so much time, Basil. I'm sure you have people waiting. Thank you very much.
Thank you. I appreciate your call. It's a great question. A lot of people are asking that same question. Let's go to Ken in Fort Madison, Iowa. Hi, Ken. How are you?
Hi, Basil. Thanks for taking my call.
My pleasure.
I talked to you earlier this week about Silver Wheaton and Freeport McMoran.
Yes.
Wondering what your outlook for was now. They've gone up a little bit.
Okay, now what happened is, as we were talking, folks, SLW is silver wheaten, and silver's not acting as well as gold. So silver wheaten is SLW is trading at 24.52, up 61. Well, if you go to the last low of 21.66, 21.86, is that right? 21.86. Just let me type that in. 21.86. So just 1, 2, 3, 4, 5, 6, 7 days ago, and you're up at 24.53. Hey, that's a nice 12% gain or something like that. I already drew in the pattern. Let me expand this. So for those of you who are looking at Tiger TV, let me just, while I say Tiger TV, if you don't mind, I'm just going to go there right now. Because I forgot to put this up. I like to see how people are looking at the chart, because I'm looking at it the same way as you. So here we go. There you are. I can see the chart. Beautiful. There it is. Okay, great. You can see it nicely. There's a gray rectangle that I've already drawn. I'm suspecting that what we're going to get is this pattern that I just drew, and it's going to go towards SLW is going to go towards the gap, the low of 26.05 made on the 12th of April. Now, this is going to be, for me, a really interesting thing and really a test of a particular technique. I mentioned that GLD had made a price volume climax low. That's the price goes to a high, the price goes to a low, and the volume goes to a high. But that's the only one. Almost all the others, whether it's gold contract, whether it's SLV, let me just double check SLV. I think it was a day early. Oh, no, that was on the same day. And I don't know if that's the highest volume that we've had. That could be interesting. Let me just check it out. Let me squeeze it closed. Yeah, okay. Oh, no, there's another one. This is the highest. So SLV and GLD have made pretty much, not quite the same chart patterns, but the same volume, climactic volume spike low. That says to me, and I was thinking about this early this morning, are we looking at the Dow, because my Dow 4 horsemen are starting to say, hey, be a little bit careful here in terms of how the market's going to react, because there have to be a lot of other stocks that are going to support. If your key stocks, UTX, IB, and GE, and Triple M, are pulling back, there's no real leadership, how are we going to deal with that? So my thinking here is that for the moment we're going to rotate a little bit longer. And I was saying, is this telling us that there's going to be some kind of a sudden bank crisis, because then gold will spike? But I have to tell you, I looked at the XLF, and I like what I'm seeing in the XLF. I like it. It's a strong leg C up in the monthly. The weekly is breaking out. Now, this could be leg F in the weekly. I think I'm going to have to call this a potential for a new... Well, I'm going to call it F at the moment, but it could recycle. And the daily looks like it's broken out for a brand new leg A to the upside. So when I put that together, I'm saying there is enough rotational energy to see the FCX, which is your question, the materials have a pretty decent, I have to call it a bounce. Now, did you get into any of either the FCX or what was the other one?
SLW.
SLW, did you get into SLW at all?
No, I haven't gotten into either one of them.
Okay, so this is what I'm going to recommend to you. There's a down channel that I drew in the weekly chart of the SLW. I'm going to recommend understanding that this might be a failure pattern. I don't know if it's going to be a failure pattern, but to have a small position in SLW, I think is fine right here. It's at 24.46. If it's a small position, I wouldn't say 3-point stop. Well, I don't know what kind of risk tolerance you have, but the weekly is suggesting the same as the daily, that there could be a bounce. The monthly still looks terrible. It's a counter trend rally. It's the same. I can't change my belief about the FCX either, although I tend to think that they're both at about the same price. FCX is Freeport McMoran, which is at 30.26, coming off the day's high. This is leg A. So this is what I'm going to suggest. You could start a small position in, I don't know about the chart pattern of the SLW, but if you ask me about the SLW, I'm going to say, yeah, a small position in SLW, and to go with it, the FCX, Wait for a pullback. It's a 30.26. I'd probably want to nibble at it under 29.60, and I'd have a 1-point stop on FCX, but I'd have about a 1.50 stop on the SLW. Tell you why. If this is going to work, it's got to go really quickly to the gap, to the 31.82 level in the FCX, which is at 30.25, and the SLW has to quickly go to the top of that gap, which is, as I said, 26.05. So in that one, SLW, I would start a position. You could do it right here. FCX, I would want a little bit of a pullback, just for comfort, that's all. But I would treat it as a trade. And if it does something better, we can look at it again to say, hey, now it's improving. Do you want to add to the position? I wouldn't get carried away because the weekly chart, especially SLW, I should say both of them actually, especially SLW more than Freeport McMoran, is very weak. So this is, I have to treat it as a counter trend rally. So I hope that helps you.
That does very much. Thank you very much. And you have a good
Thank you, Ken,
day.
for calling. I appreciate it. Let's go to Freeman and Dallas. Hi, Freeman. How are you?
Basil, how you doing, sir? Hey,
Very
Basil,
well, thank you.
Hey, Basil, I bought Facebook when it was testing that 50-day moving average, and
Yes.
I'm not seeing much of like the bounce is not as big as I was anticipating. Do you think it'll test back that 50-day? What do you think?
So let's just do this, folks. We're looking at FB, which is Facebook social media company. It's actually been a terrible, terrible trade. Unless you traded it for the shorter term, there was a fabulous move from the 1755 low back in the summer of 2013 to a peak E-top at, what was that, 32.51. That was the week of the 1st of February. Now, this is what I would say to you. I think you have your eye on a stock that has the potential to try to go for the 200-period moving average of 26.81. It's been a very tight, this is almost like it's been wound up like a clock, and the spring is there, but the spring has to unload and push the price like a trampoline quickly, and it's at 26.33 by Friday afternoon, Monday. This thing has to get over the 26.82 horrible candle of the 18th. If it's able to do that, it's above the 200-period moving average. Immediately you can put your stop, make your top a little tighter, and then the next level you'd want to see is 27.20, the high of the 17th of April. I would just go one step at a time. It was supposed to make a U-shaped pattern recently, and then it stalled when it was up on the week of the 12th of April, when it was at 28.10. It showed all the signs of trying to get back into that really ugly candle of the 1st of February of this year, the week of the 1st of February. It couldn't do it, so it keeps stalling. So I think you're in the right position. But I'm going to say this, Freeman, if it takes out the low of yesterday, I wouldn't even wait for the low of the day before, 25.80. I'm just going to say to you that spring is not working. It's just a tight consolidation. You're going to have to wait. It must move. It's got to move quickly. And the 120-minute chart, let me just have a look at it. The last one went peak A, B, C, D, extended up to E and F. And now it's, yeah, I feel the same way about the 120-minute. Everything's there, but the price is not moving. It's got to move. It's only up 16 cents. So, Freeman, speed is the issue here. So I would have a fairly tight stop. Let it do its thing, okay?
Thank you, sir. I appreciate you, Basil.
Thank you very much. Folks, I'll be back. Basil Chapman, Tiger Conditions Hour, and I've got a couple of emails that I will get to straight after this.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everybody. Just real quickly, Larry had emailed. He asked about SVU. I thought I recognized the name, but I hadn't looked at it for ages. It's Super Value. I believe they're supermarkets or hardware stores. Anyway, Super Value trading at $5.87, down 15 cents. There's a left side, right side price time match in the weekly that says by the week of late May, early June, there should be a test of the high of $6.78. That's a little bit away here. It's about a point away, but it's in leg D in the weekly, and the weekly is still acting very well. Monthly is in leg B. Horrible chart in the monthly. But the daily is the one that's really impressive. It's in a beautiful up channel. This up channel is making a peak C today. There's a chance that if leg D can spike above 621, that's a lot. That's almost 40 cents. But if it's able to do that, it's going to turn the up channel resistance into support. In the meantime, support is at $5.44. That should hold, but the up channel major support is at $5.09 to about $4.95. Right now, it's acting well. If you're in it, I'd stay long. I would just tighten a stop up on a part of my position, but in the meantime, it's acting well. I think I got to almost all of those. Okay, let's go to our next caller. We've got Bruce in Lakeland. Hi, Bruce. How are you?
Hey, Basil. Wanted to ask you the 120-minute chart on the ES S&P Mini and the 120-minute on the Nasdaq futures.
Oh, and the Nadex, sure.
And what do you see on those two, and how is it going to? What's going to happen in the next couple of days based on that?
Well, based on this, what I'm looking at here is that the 100, folks, what we're looking at here is I've got just this right side notated. There's what I call a left side, right side price time match, and that goes from the high of the 11th of April at noon, where it hit 2858.50. This is the NASDAQ futures June contract, plunges down to a low of 27.24 on the 18th of April, and then runs back again. Look how beautiful. You know, you talk about left side, right side price time match, but I'm also so impressed always at the amount of bars, the number of bars on the downside to the upside to the same level. There's no crash, there's no upside crash, just a steady move down, steady move up. And look what's happened here. We are within, I've got a price time match of 2858.50 that should go between now and tomorrow at 8 o'clock in the morning. Is that 8 o'clock in the morning? 8? No, 20. That's 8 in the evening. Yeah, tomorrow. No, it can't be. The 25th at 20. That's 10 o'clock. That's 10 o'clock. What is it? Oh, tonight. 10 o'clock tonight. So it goes into early morning tomorrow that it should try to test the 28. And at that point, my suspicion is that there'll be some kind of a digestive moment. But the beautiful thing about this is that if it takes out 2858.50, closes above it, then all of a sudden I can say there's a good chance that we've got leg B up in the daily of the NQM. I know you talked about the 120-minute chart. So what it says, we're getting real close to the NASDAQ doing some consolidation. But if the daily spikes even 25 cents above the previous high, there's a chance that it's going to be called a leg B if it's in this move now. So where's the support? The support now is at 28.34, about 10 points, 11 points lower. Hope that helps you.
Okay, on the ES.
Yes, and the ES is...
What will happen? What's going on with them?
Now, that one's lagging just a little bit. I have called this a leg E. It could have recycled to be an E/B. I'm just being conservative right now because the stochastic's under 80%. But if you look at it, it's got the same price, left side, right side price time match, and that goes to the high of 93. Yeah, that goes to the high. Oh, there's the break. The high of, I'm missing it, of the 11th of April,
93.
And that comes in today sometime by the close today. It's got to try to tackle that high of 1593. So this is close to a bit of a consolidation as well. Hope that helps you.
Yes, sir. Thank you.
Thank you very much. That was Bruce, and we got Larry Pesavento coming up. Fabulous show as always, I'm sure, and I'll be back tomorrow. Have a great day.